Major indices are down triple digits, with all S&P groups trading lower on the session, and crude oil leading commodities weaker today on a number of news points. I'm Rebecca Darst from the New York Stock Exchange, and this is the NYSE MacDesk Floor Report for May 29th. With the Dow down 130 points and the S&P down 13.5, let's recap the action on global markets overnight. The Shanghai Composite Index signed off on a fourth straight day of gains, led by strength in Chinese automobile and parts makers. The higher close came despite news of the IMF lowering its GDP forecast for China by 25 basis points, urging officials to keep careful watch on the rapid expansion of credit in that country. Japan's Nikkei also closed higher, despite weakness out of retail and tech names. Newswires picked up interesting comments overnight from an advisor to Japanese Prime Minister Shinzo Abe, Koichi Hamada, who was quoted in a Tokyo interview by way of Bloomberg to the effect that South Korea shouldn't blame the Japanese central bank if they're concerned about the impact of a weaker yen, but should look to their own central bank to adjust monetary policy accordingly. The Japanese yen has lost a full 1.5 points against the South Korean won year to date. This, not surprisingly, is a concern to Korean exporters. Interestingly, a Bloomberg report today also noted that implied volatility in futures on the Japanese 10-year note rose to the highest level since the fall of 2008, barely a week after the yield on the 10-year broke above 1%, and despite a recent massive push by the BOJ to buy government bonds. Many traders, in fact, feel the Japanese central bank ought to be buying more. Much of the pressure on global markets this morning emanated from Europe, with the FTSE, the CAC 40, and Germany's DAX ending the session lower by close to 2%, following a string of disappointing data points on the continent. German unemployment was a notable disappointment, and comments from Eurozone officialdom may also have added to the lackluster sentiment. The ECB presented its biannual financial stability review, noting that prospects for the euro area remain well below those for international peers, both major advanced and market economies, and noting concerns for Eurozone bank balance sheets. Here in the New York pre-market, futures indicated a triple-digit drop at the open on follow-through from the global markets, as well as softness in the commodities complex. We are off the session lows at present, but still quite a bit lower. Weakness is pronounced in utility stocks, which are down 2% as a group, as well as telecom and consumer names, with the exception of automakers, thanks to an upgrade of Ford earlier this morning. The VIX is also off its session highs, having drifted above a reading of 15 earlier in the session. And in the option pits, we've been noticing heavy activity in June VIX calls and strikes as high as 25. That's 67% out of the money, but remember, it doesn't take long at all for volatility to spike on any kind of global macro-type volatility, as we've seen over the past few summers. Let's take a look at the global economic releases likely to move the tape next week. On Monday, June 3rd, Japan will release May auto sales and official reserve assets. It's going to be a heavy week of PMI data on the global front, with Singapore, Italy, Germany, the UK, the Eurozone, and the US all releasing May PMI manufacturing data on Monday. The US data calendar also includes ISM manufacturing and prices paid, revisions to prior construction data, and after the bell, domestic auto sales for the month of May. Earnings are light on the ground next week. Dollar General is the only noteworthy report due out on Monday. On Tuesday, we've got May monetary-based data from Japan, along with April labor cash earnings. Australia will release its Q1 current account balance, along with a cash target rate from the RBA. UK data includes May house prices and a construction PMI number, while Eurozone data is limited to April producer prices. The US will release April trade balance data, the May ISM New York Index, a June read on economic optimism. The macro calendar picks up briskly at midweek. Then we'll get a read on Australia's Q1 GDP. Hong Kong will release its May PMI, and the European session may take a cue from several May PMI services numbers from Italy, France, Germany, the UK, and the Eurozone, along with another look at the Eurozone's Q1 GDP number and April retail sales. Canada will release April building permits, while the US calendar includes May weekly mortgage applications. We'll also get the first of several key jobs numbers next week, with the May ADP employment change and Q1 non-farm productivity and unit labor costs due out before the bell, along with April factory orders, May ISM non-manufacturing, and the release of the Fed Beige Book in the afternoon. On Thursday, South Korea will release its Q1 GDP number. Japan will release data on Tokyo office vacancies in May. European data is limited to French mainland unemployment for the first quarter and German factory orders for April, but we've got rate announcements from the Bank of England and the ECB, and the European Central Bank is also due to release updated growth and inflation forecasts as part of that rate meeting, which is definitely worth watching out for, especially in light of today's comments. Canada will release its IB Purchasing Managers Index for May, and we've got more job market data from the U.S. with May challenger job cuts along with weekly jobless claims and a consumer outlook index from RBC. Earnings are due out from Sienna, women's apparel name Ann Inc., and Quicksilver. We'll end the week with Japan's April coincident and leading indexes, and Germany will release several data points, to wit, April trade balance, current account, imports and exports, Q1 labor costs, and industrial production. France and the UK will release April trade balance numbers, and we've got the May change in non-farm payrolls. Wall Street consensus is looking for 165,000 new payrolls, right in line with the prior reading. We'll be watching the activity closely from here on the floor, so check us out next week for the midweek edition of the MacDesk Floor Report.